Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. In today's episode, we're going to play a fun little game called Engineer Turns into Analyst, and not the Gordon Johnson type analyst. What we're going to do today is I'm going to unveil my predictions for the Q3 earnings for Tesla, which are set to be unveiled today after the close of the stock market. So do us a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into it. Here we can see my model for Q3 Tesla earnings. Again, keep in mind, none of this is financial advice, just my model and me using my numbers and my guesses of what I think Q3 could look like. So let's go ahead and just dive into this. And let's go ahead and start off with delivery units, automotive sales, and total sales, etc. I'm just going to go ahead and unhighlight these. And we'll go ahead and start off by talking about the top here, delivery units. So this one is pretty simple because we already know what those numbers are. So that part is easy. Now, as far as automotive sales, this was, again, a lot of this becomes kind of a guess. And some people like a Rob Maurer have a very, detailed model of every single car, every single production, every single, the production rates, the way Tesla increases their price, things of that nature. All right, I'm an engineer. I'm more of a heathen. I don't go that far into it. What I essentially just did was to be a little more conservative. I took the average selling price from last quarter and I applied it to this quarter. My thought was that would be more conservative, as I think if anything, Tesla's going to have better sales in Q3. So I'd rather, just be a little bit on the conservative side just to make sure that I'm not, kind of having delusions of grandeur with myself. With that said, that came out to just over $12 billion in automotive sales. As for the regulatory credits, this is just a shot in the dark, pure guess. I really don't think that they're going to be showing as much in credits as we've seen in the past. And so I stuck with 350, the same as essentially what they had last quarter. If you see in the past here, we've had 518, we've had 428, almost 400 here in Q3. And so I do think that we're going to start seeing this decline, especially as other companies start to roll out their own EVs and their own initiatives and, are able to potentially buy credits from other companies. And so I actually think this will decline by, about 11%. So I'm holding this at about 350. Again, that's decline year over year, not quarter over quarter. Next up, we have energy sales. This one I'm becoming more and more bullish on. I do think that Tesla's starting to rebound with their energy, mainly because of some of the commentary from Elon during the Q2 earnings call and a few other, interviews that we've seen with Elon, where he essentially indicates that the pipeline for energy is not slowing down. There's so much pipeline. They have so many projects to work on for the future that pipeline sales, demand is not an issue. I think we're going to start slowly seeing this come into play, into the fold. You can see here in Q2, we had a nice recovery from Q1. 801, that's nothing to laugh about. They obviously, had some big projects there, but I do think Q3 we're going to see some more of that. Year over year, I'm going to see a big increase here to about 43% increase. So 825 is my number for this one. Again, this might be something that I'm overly optimistic about. In reality, this could come down pretty substantially. We might see this back down to, 5 to 400 million. Again, I do think that based on the comments from Elon during Q2 earnings, I think this is where I'm really going to make my gamble, my bet with these numbers here. So this is my prediction. As far as services and other, I don't think much is going to change. I just bumped it up a little bit from Q2. And mainly, this is effectively just a portion, a percentage of what we really see from the overall sales. And the only reason I even really bumped it up is because we have about 40,000 more sales this quarter compared to last quarter. This is pretty much in line. This is probably going to be off, but I think if it is off, it's very marginal. So, as far as the amount, it'd be inconsequential for the overall number. And so this leads us with total sales of $14 billion. Right? That's huge, especially when we look at what it was in Q2 and Q3 and we look year over year. This is 60% increase year over year. That's massive. Keep in mind, this also the credits, if you look here, right, you can see the credits aren't part of this equation. So this is where things start to get a little more interesting. As for the automotive profit, this actually ends up coming out to about 29.5% roughly. So about 100 basis points increase. That's pretty good. Regulatory credits, this stays the same. Here we can see energy profits. Again, I don't think we see much of an increase here just yet, but what we do see is a stabilization of the energy side of Tesla. And I think for that reason, we will see a little bit of a bump here. So from 20 to 23, nothing too crazy, especially not year over year, only about 10%. You can see here we're 21. Again, this is one of those where even if I'm way off, I think it'll be very marginal. I don't think it'll be that big of an impact to the final, EPS, GAAP and non-GAAP when we get to those. Services and others profit. This I see as a decline. So, I see this, coming down to, negative about 29. I think we have a trend here that we can see 71, 63, 69, 35. It does seem like this is getting better for Tesla. I don't see this going profitable just yet. I think, maybe midway through 2022, we'll start to see that. But the trajectory is going the right way, right? We're slowly getting down to the black, so hopefully we can get to the green soon here. But right now, we're just sitting here at about negative 29 million. So this leaves us with a total gross profit of about $3.6 billion, right? So this is a 75% year over year increase. Massive. So this results in a 75% year over year growth, right? Massive growth. Again, this exceeds the 50% year over year that we keep hearing from Elon and Tesla. At least from a gross profit perspective, we're headed in the right directions. All right, so now, for more of the fun stuff, let's talk about automotive gross margins. Here we can see that the automotive gross margins comes out to 29%. This is, just a little tick up from last quarter. You can see it's a decent amount from Q3 of 2020, but this is very strong. You just don't see this. I fully expect Tesla to be in the 30s by next year, especially as Shanghai ramps up, as Berlin, Austin ramp up. I'd be very surprised to see if those, it's not just the efficiencies of the factories, but also the cost for transportation from one factory to the next, right? Going from Shanghai to Europe versus going from Berlin to other countries in Europe, it's just a no-brainer, right? It's a lot more cost-effective. Even in the United States, going from Austin to Florida or New York City versus going from California to Florida or New York City, right? Those are massive differences in cost. So I think all of that does start to come into effect overall for the business. As far as automotive gross margins, of course, right? I think the efficiency that we're going to see within the factories, that will play into this number. I think Austin is going to be one of the most impressive factories, as well as Berlin. I think they'll be even more impressive than Shanghai. And of course, over time, after these factories open and they learn from these factories, they can iterate and then they can announce new gigafactories, which is something I'm still surprised people want to just see another gigafactory. But if they open a new factory now, well, they haven't had a chance to learn from Berlin and Austin, which haven't opened yet. In essence, they wouldn't be improving. So we need those to open. We need those to get exercise. We need learning lessons from those, and then we apply those to the next factory. Here we can see the X credits percentage and energy gross margins, right? We can see everything here from a percent perspective. Now let's uncover here. So we have R&D, SG&A, operating expenses, operating income, and operating margin. As far as R&D, I don't think this is going to change too much more. I think things like Cato are coming to an end as far as R&D budget. They may be putting more funds towards something like Optimus and other projects that we're not aware of, potentially the $25,000 vehicle, right? I guess a lot of R&D could be going to those situations, even FSD. If that's the case, I don't think this will be changing too much, because I think all of those same projects would have been going on in the previous quarter. In fact, I also wonder if any of this really would be reflected from the Model S and Model X, which is what we saw here in Q1. Maybe it dwindled down a little bit in Q2. So it'll be interesting to see what happens in Q3. Now, Elon has said, especially recently during CodeCon, that they have plenty of projects to invest in, right? They're not out of ideas. And he even mentioned that during the investor day in Austin, or the shareholder meeting, in Austin, where people asked, are you going to provide a dividend? And, he bluntly said, well, a dividend's really for a company who's out of ideas, and he's not there yet. So again, more money could be going to other R&D for other ideas, right? And even another gigafactory, maybe they're trying to figure out new processes for that. So this could go up, admittedly, but I'm just going to keep this here just because I think things are going to come down. I think Tesla's not one to really get too overextended. And right now they're pretty extended, right? They have Cybertruck, they have 4680, they have the Optimus bot, they have FSD, they have obviously Berlin and Austin. They're trying to get Model X ramped up as Model S's. So there's a lot going on here. And the 25,000 vehicle, forgot about that one. Tesla insurance is going. There's just a lot going on right now. So I don't really see them investing heavily in R&D in yet another idea, another project, but hopefully they are, right? We would all love that. SG&A, again, keep in mind, this is where all of the stock compensation lives for Tesla. So obviously a big chunk of Elon's is here, but also everyone else in the company. This, again, I think is going to start coming down. I don't think we're going to see this continue to grow, mainly because the majority of Elon's compensation has been accrued, from my understanding. Now, I know there is a certain EBITDA trigger which will unleash another tranche or another portion of Elon's compensation, which they might hit this quarter. And if that's the case, throw all these numbers out, because I assume they would have to account for that. But then again, maybe that'll account for Q4. I'm not really sure how that works. Nevertheless, I'm sticking with this 925. I think SG&A comes down a little bit from last quarter. I think the real reason for this is because Elon's compensation being accounted for less and less as quarters go on. So then we have operating expenses. Obviously this is pretty simple. SG&A, R&D, operating income. So this again, right? We take the total gross profit and we remove it from operating expenses, and this is what we're left with. And then here we can see operating income from a percent perspective. So this is just shy of 15%. Keep in mind, other automotive manufacturers are in the low or in the single digits, right? They're not even in double digits like this. And this is, Tesla with only 2 factories, one a retrofit factory, one their first, call it beta factory, right? Their first attempt at creating a factory. And now they're going to have Austin and Berlin coming online, which would be, their second iteration at a factory, right? Where they get all those lessons learned. If they're doing this with a retrofit factory in Fremont and their first ever attempt in Shanghai at creating their own factory, what happens when Berlin and Austin comes in? What happens when they don't have to deliver vehicles as far? What happens when they have more efficient processes, less parts, right? When the supply chain's even closer to where the factories are, right? These things start to really propel themselves. More importantly, what happens once we start to really recognize the fact that the Shanghai Gigafactory is the export Gigafactory for Tesla? They are extremely efficient, very low cost in China. Let's go on and move over into the final part here, which everyone's probably most excited about. As far as net income, we have 2,408,000,000. If we remove the credits, right, or the compensation, we get net income gap of 1,934,000,000, which leaves us with an EPS non-GAAP of $2.14 and an EPS gap of $1.72. This, I believe, is pretty aggressive compared to everybody else out there. I'm actually happy. So for deliveries for Q3, I was substantially over the likes of Rob Maurer, whereas here for my numbers, I'm actually slightly under Rob Maurer. So I'm actually kind of happy about that. Our numbers are actually very different, but all throughout here, but somehow we both come out to very similar numbers at the end, but I'm still below him. So I can, for once, say I'm more conservative than Rob Maurer. I don't know what that says about you, Rob, if you're watching this, but hey, I'll take being more conservative than you for once. So these are my numbers. Fully expect this. And again, I honestly think this is conservative. My average selling price per vehicle was based on last quarter. I think we're going to see a lot of efficiencies. I think the fact that Shanghai became the export hub for Tesla is really going to show through in this quarter. And then don't forget, they literally delivered 41,000 more vehicles than they did last quarter. Like, that's massive, right? They went from Q1, which was, let me come back up here. Q1 was what, 184? Yeah, 184. Q2 is 201, all right? That's a big jump in its own, right? That's almost 20,000, right? Just a little under 20,000. But to go from 201 to 241 vehicles, that's huge. Right, that's a massive jump. So I really think we're going to see that reflected in this quarter. Now, there are some other stuff down here that I tend to keep track of as well. Free cash flow, this is another one that I've kind of just given up on because, again, it doesn't really matter in the big scheme of things. Tesla's always doing weird things. Maybe they choose to pay off debt. Maybe they don't. But debt here, I want to continue to track this. This is 7.8 billion, by the way, not $7.80. So we'll see what this is, and we'll see if it decreases or not. I kind of hope they don't decrease it, unless it's, for reasons of trying to get a higher credit rating. Okay, that makes sense. As far as energy, again, here we see the massive bump up compared to the previous quarter. And that's why we were able to get, back into positive territory with the energy business. And I think we'll continue to see this. I think this is going to grow. I really think we're finally going to start seeing energy start to ramp up here, which I'm very bullish on, very excited about. As far as Bitcoin impairment, this is another one that I'm just not going to touch. Again, last quarter, I think everybody tried to predict it. I think I had something around 40, 50 million impact on this, and it was just so off. It ended up being 23. And so I just decided, again, I'm not even gonna worry about this one. If there's a Bitcoin impairment, if there's not, is what it is. It's not something I'm gonna stress about. It's not really gonna change the model too much. When we're talking about billions and you're sitting there talking about 20 million, 10 million, 15 million, it really doesn't even move the needle. As far as Elon's stock comp, you could say I'm making a prediction here because I have roughly the same number for the stock plan. You could say I'm assuming 176 million is going to be recognized. We'll go with that. Why not? And then here's something that, again, I don't see anyone ever actually predict, but it's something that I do like to keep track of: days of inventory. So last quarter, they had 9 days of inventory. I imagine this quarter, there might be 0 days of inventory just because of how much they sold. I think their production came out to about 238,000 for the quarter, but I think they sold I know they sold about 241,000 vehicles. So I think this 9 days of inventory is really what made that up. They might have 1 or 2 days of inventory, maybe 3 days. I would expect to see this drop substantially, which is good and bad. On the good side, it means that there's, huge demand. On the bad side, it means that there's huge demand that we can't fulfill. So those are my numbers, right? So overall, all you really need to know: 214 for non-GAAP, 172 for GAAP. Keep in mind, I'm just an engineer. I like to play analyst. I do like my spreadsheets. I like to play with them. This is something that is a lot of fun for me. Again, 241,000 vehicles. This is massive. Quarter over quarter, 72, call it 73% year over year. This is just, these numbers are enormous. This is going to be the best quarter Tesla has ever had. I would be very surprised if it's not. I also, in the spirit of making predictions here, again, before I even say this, not financial advice, but I do want to make a little prediction. I don't think Tesla stock is going to react the way it has in previous quarters. In other words, previous quarters, after earnings are reported, Tesla stock tends to fall, even if it's a great quarter. Right? We tend to have to wait 3 to 5 days before we get a true reflection, a true reaction. I think that this quarter, if it's as solid or better than what we saw last quarter, my prediction is that we blow past where we currently are. I could see us easily breaking past 900 a share. Now, this may only happen in the pre-market right after earnings are announced, but I do think that we are just so close to that ceiling. Everybody's waiting, right? It's almost like this pent-up demand and anticipation, and everybody just wants to see Tesla hit all-time highs. We're going into Q4. We're going into a bullish time of year. I think it's going to happen. I know everybody thinks it's going to take a dip. Everyone thinks people are going to sell the news. I don't think so. I think this is the time where people try to buy up Tesla, try to fix their portfolios if they, have issues or they haven't performed as they should have. So we'll see what happens, but that's my bold prediction. Feel free to keep me honest on it. Do me a favor, below, comment what your numbers are, what your predictions for EPS, and let me know, do you think Tesla stock goes up or do you think it goes down after earnings? We're going to leave it there for today. Do me a favor, hit the like button, hit the subscribe button, ring that bell. I really appreciate you guys, especially if you stuck to the end. It means a lot to us. We spend a lot of time to make these videos, and with the fans and the audience, subscribers we have, it really means a lot. I appreciate all the positivity that everybody has on the channel. Literally, just about every single comment I have below, I see them, I read them all. I actually replied to every single one personally. It's not like someone else is doing it, it's all me. And man, the positivity is just overwhelming. I truly believe, even though I'm a smaller channel, I truly believe I have the best subscriber base, the best audience that's out there. Just nothing but positivity in today's world. It's just such a, it's just a nice thing to see, and it really keeps someone humble. All right, we're going to leave it there for today. I appreciate all of you. Thank you again. Peace.